morning. You're watching Daybreak on Bloomberg Quint Live, and I'm Alex Matthew. First, the headlines this morning. It's a muted start to trade in Asia. The dollar gains for the first time in 6 days. The Fed minutes suggest more hikes if the economy stays on track. Now, Bloomberg has learned that the much-anticipated IPO of Saudi Aramco has been put on hold. Sources, however, indicated that it has not been called off. In a major blow to the U.S. President Donald Trump, his former personal lawyer has confessed to charges of illegal campaign financing. His former campaign chairman, too, was convicted of fraud. And the Trump administration has imposed an over 50% anti-dumping duty on Indian metal pipes. And finally, 4 people were killed and 21 injured after a fire broke out in a 17-story building in Mumbai's Parel area. A quick check on the U.S. markets now. The U.S. stocks closed mostly lower on Wednesday, with the S&P 500 and the Dow snapping a 4-day winning streak as the minutes from the last Federal Reserve Open Market Committee's meeting reaffirmed the central bank's hawkish bias. The publication of the Fed's notes came on a day when investors attempted to determine how the legal drama surrounding President Donald Trump would impact the market, as stocks quietly marked the longest bull run in history. Abigail Doolittle of Bloomberg News has everything that happened on Wall Street in this report.
Stocks finished mixed in Wednesday's Wall Street session. The Dow fell by a little more than 0.3%. The S&P 500 was down fractionally, snapping a 4-day winning streak, almost on pace for its best streak since February, but the small decline. But the Nasdaq did finish higher, up about 0.4% for its 5th up day in a row. Now, turning to another 5-day streak, the Bloomberg Dollar Index down 5 days in a row, its worst losing streak since February. Not a lot of influence from the Fed minutes, while the 10-year yield, a little bit of influence from the Fed minutes, finishing down just a bit. That tells us haven bonds were rallying. Some of that could also have to do with a small haven bid on political uncertainty around President Trump, which didn't seem to have too much of an effect on stocks. As for some big movers on the day, Target, the big box retailer, those shares up 3.2%, putting in an all-time high on a big beat and boost quarter. CEO Brian Cornell's turnaround plan really working out there, while Lowe's up 5.6%, an all-time high there. Racing pre-market losses to gain. They beat, but they lowered the guidance. Investors liking, though, the fact that the new CEO there, Marvin Ellis, he has reset the bar in terms of numbers, and he is effectively giving out a Retail 101 turnaround plan. Investors positive with those shares of Lowe's, one of the top performers for the S&P 500. As for the best sector, oil, energy. Oil up about more than 3%, its 5th up day in a row. And some of the biggest boosts for the S&P 500 energy sector did, of course, include Exxon and Chevron. But with stocks finishing mixed and haven bonds just slightly higher, the risk appetite in Wednesday's Wall Street session about neutral. In New York, Abigail Doolittle, Bloomberg News.
Now, it's fair to say that Donald Trump has had to face a cloud of legal uncertainty pretty much since he took office. Russian collusion, campaign finance violations, paying off porn stars, you name it. All of that legal drama came to a head on Tuesday afternoon when 2 of Trump's former closest allies, former Trump campaign chair Paul Manafort and former Trump lawyer Michael Cohen, were found guilty in separate but related cases. Trump has, however, denied any wrongdoing after his former lawyer struck a plea deal over payoffs to 2 women who have claimed to have had affairs with the president. Bloomberg's Joe Sobzik has all the details in this report.
Strong evidence, I think it's conclusive, but let's at least agree that it's strong, that Donald Trump knew that Michael Cohen was going to be advancing money on his behalf to hush up the relationships with these 2 women, and that it had a political purpose to it.
In an interview with Fox News, the president himself said he only learned of the payments after they were made, while insisting nothing about it was illegal.
Later on, I knew. Later on. But you have to understand, Ainsley, what he did, and they weren't taken out of campaign finance. That's a big thing. That's a much bigger thing. Did they come out of the campaign? They didn't come out of the campaign. They came from me, and I tweeted about it.
Let's get to Bloomberg Congress editor Joe Sobchak joining us from Washington right now. So, Joe, it's difficult to kind of parse through who we should believe here, but this is really turning into a he said situation.
Right, and as Lenny Davis, Cohen's lawyer, pointed out, there is some suggestion that federal prosecutors have got additional evidence besides just Cohen's word on this. He pleaded guilty to making these payments at the direction of a federal candidate. Davis says that that candidate was indeed Trump. This is the only person that Cohen was working for at the time. So there are still some more chapters in this book to be written. There's a continuing investigation in New York as well as the Mueller investigation in Washington, so that there may be some additional charges coming out in both investigations.
What does this all mean for November is the big question. Is there going to be a political fallout for Trump and the Republican Party, Joe?
Well, it has certainly handed the Democrats a new weapon in their campaign arsenal. They have pretty quickly pivoted to focusing in on corruption in Washington, particularly within the Trump administration, citing both the Paul Manafort conviction and the Cohen plea deal, as well as two very early Trump supporters in the House, to a Republican in New York and another in California, who've recently been indicted on charges, one on campaign finance charges, the other on insider trading. So this has given some new fuel, and there's some recent polling out that suggests that even before the Tuesday revelations, that the Republicans were slipping behind some more in the race for the control of the House.
Now, there's clearly lots more that will emerge from that developing story. But for now, let's turn to markets now. And let's talk to David Inglis of Bloomberg News, who's joining us live from Hong Kong. Good morning, David. What cues can you give us going to trade for India here?
Well, we're doing well. I think that's a help, obviously, as you count down to your open there over in India. I mean, there's a bit of a nuance though when you look at I guess what the benchmark's doing. So MSCI Asia or MSCI ex Japan, because we're either flat or slightly lower on those two. But the rest of, or the majority of stocks are actually on the way up. I mean, give or take, we're looking at about 48% of constituents on the major benchmarks here in Asia are actually moving higher. Volumes are quite light, of course, as we move into, as we get into the thick of summer months here. We're just getting the Chinese markets as well coming online about 7 minutes back, and that's providing a further boost to equity markets, which were already gaining some upward momentum into the open here. So we're up 0.5% on the CSI 300. I believe that's, at least here in Hong Kong, we're up for a fourth straight day here as well. We're obviously continuing to watch Xiaomi, which of course went public just very recently and just released its financial results, its first set as a public company. Good beat on earnings. Good beat on revenue. I should note earnings, though. There's also a slight sort of qualifier that's needed there because they booked a one-time gain, which actually bumped net income into a profit. If you strip that out, though, on an operating basis, they are continuing to lose some money. Speaking of earnings, lots of other names, of course, coming out of Australia as well. But at least in that specific market, these changes really. And these challenges to Malcolm Turnbull there, and of course taking a new and more serious twist this morning, weighing on those markets there. So the Aussies falling the most across the FX markets, yields are pushing lower, and the banks are just getting absolutely hammered. And I think to my earlier point, it's the big four Aussie lenders and the damage that's happening. There's actually pulling down or weighing or providing enough counterweight on the benchmark, which is why we're seeing that lower. So we're continuing to track that as a political story, obviously. You guys have been talking about these gyrations over in Washington. It's certainly not a done deal. And of course, not to mention in about 2.5 hours from now, or a little less than that, these new tariffs kick in, $16 billion from both sides, China to the U.S. and U.S. to China. Not that they should come as a surprise. I mean, well telegraphed anyway, but certainly we got to start really talking about the sort of drag and potential drag to growth. In case you guys missed it, we did a survey here at Bloomberg, and what economists are saying is that we might see a 0.3 percentage point drag on Chinese GDP growth next year. So that takes that to about 6%, just to put a number there. Lots of things happening here. Back to you guys.
Thanks so much for that, David. And particularly put that in context, the meeting, of course, between officials of the US and China ongoing at the moment. No big announcements expected from that meeting, though. Let's turn to India now and talk about the trade setup for the day in India. Darshan Mehta is here to tell you all about that and also to tell you what's happening in the futures and options space. Darshan, good morning. Several news updates to talk about after the midweek market holiday also.
Yeah, so basically the SX Nifty is indicating a gap up of 8 points, but remember we were shut yesterday. The SX Nifty was not, so that was up 41 points yesterday. So expect close to a 50-point gap up opening when we see. So that's the news that we're getting in. We're above the 11,600 mark finally. So 5 points plus add in another 41 points. So close to 45-50 point gap up is something that we can expect in trade. Now, as far as the ADRs are concerned, Tata Motors was down 1%, Vedanta was up 0.5%, Dr. Reddy's was up another 0.5%. So that's the trend that we're getting in. Rather muted cues coming in from the ADR market. Now, how did our markets pan out in trade? The Nifty was up 19 points, but there was outperformance that was seen as far as the mid cap and the small cap end of the market is concerned. Let's take a look at the Nifty Bank. The Nifty Bank was down in trade and muted cues coming in from the Nifty PSU Bank also. So rather muted trade on Tuesday. Now, how did the sectors pan out in trade? So infra and energy were the two sectors that managed to inch up in trade on a muted Wednesday. Metals continues to be under pressure, down 0.3%, and overall commodities today are looking rather muted. How has this week pan out? 2 days of trade, but the Nifty Infra and Metal Index have done well in trade. The PSU Banking Index is up almost in trade, but despite the rupee at almost 70, the IT Index is down 0.8%. So there is clear weakness that is seen as far as some of the IT stocks are concerned. Now, if you're looking at the flows, FIs, DIs, both of them were net buyers in the market. So they bought in almost 250 crores and 200 crores in the market respectively. The Nifty was up 19 points. Reliance contributed significantly. Axis Bank, Tech Mahindra, Grasim were the other contributors. Metal seeing a little bit of weakness with Tata Steel. FMCG seeing weakness with HUL. And Kotak Mahindra Bank continues to bleed over the past few days. So that's the trend that we saw on the Nifty, 11,570. But the SGX Nifty is indicating a gap up about the 11,600 mark in trade. Now, a couple of points on the FNO side. 0.5% open interest build up on the long side. That was the Nifty Q. On the Bank Nifty, what we're seeing is that saw a little bit of long unwinding that came in. Open interest is down close to 4% on the Nifty Bank. Now, where are positions being taken? Now, if you're looking at it, there is very, very strong support coming in for the market at the 11,500 mark in trade. The SGX Nifty is indicating that we will open about the 11,600 in mark in trade. So you will see shedding of open interest. This green line will come off and this red line will go up as trade progresses. That's the trend that we're seeing in. What happened in trade on Tuesday? Clearly you can see 11,500 and 11,600. Put writers are extremely aggressive, giving an indication that the base for the market is there. It seems to be, the Nifty seems to be on a rather bullish trend at this point of time. A couple of stocks in the FNO band. You're seeing that counters like Jain Irrigation and Raymond are in the FNO band. If you're looking at out of the band comes Adani Power this time around. So it was up almost 4% in trade. The other statistics is the Nifty PCR was rather flat in trade. It was at 1.70. The Bank Nifty PCR moved lower to 1.30 from 1.41. Couple of stocks that I want to point out. First of all, it will be NIIT Tech. So high open interest build up of 18% on the long side. The counter trading at record highs. The other one being Cummins India, which is seeing a high bout of short covering for the past few days. Open interest was down 13% and the counter was up 6%. And finally, a couple of more stocks. Mahanagar Gas, open interest build up of 10% on the short side. News coming in that the big block deal probably will happen today with BG Gas or Shell selling stake in the company. So we'll watch out for Mahanagar Gas in trade today.
All right, thanks so much for that, Darshan. Moving on now, Jonathan Garner of Morgan Stanley expects some tough days ahead for emerging markets, but he continues to remain overweight on India. Speaking to Bloomberg Quint's Divina Khanna, Garner highlighted the factors behind his bullish stance and the sectors that he is betting on. Listen in.
If we look at the rally, it really peaked out as long ago as the end of January, and the MSCI EM index is down around 20% from the peak. So it's on the cusp of entering a bear market, and our new target price indicates, if we're correct, that it'll fall another 8% by June of next year. So that would make a peak to trough move of almost 30%. Now, we saw something larger than that as recently as 2015-16, and we saw something again around about 35% decline in 2011. So if you look at what caused those prior bear markets, we think we see something really quite similar today. So we see a significant slowdown in the global economy outside of the US, particularly in China and in North Asia. We see a decline in commodity prices, most notably copper, which always correlates well with EM on the downside. We are coming off very high valuations. So at the end of January, we were trading almost 14 times forward PE for EM, which is the 95th percentile of the long run range. So we have negative macro catalysts, a market that was quite overvalued. If we're right, earnings estimates are going to need to come down. They've already started to fall, but they have materially further to fall. And though this has been a bear trend since the end of January, it's only around 7 months old, and that's a little short to think that this is going to come to an end anytime soon.
You know, since you were talking about valuations for the Asia emerging market basket, for that matter, if you look at the 12-month forward price to earnings, India seems to be the most expensive and stretched out at this point in time, but that doesn't seem to be stopping the kind of rally that we've been seeing in the markets. Do you see that as a problem?
Well, we're overweight India, whereas, for example, we're underweight a market like Korea that's underperformed India substantially. I think the key point about India is that it's a very different stage of the business cycle from particularly the markets in North Asia. So India had an extremely weak economic environment really through the demonetization and GST reforms and then the fiscal tightening that was being done. Now you're getting a cyclical pickup. And that's allowing the market's earnings profile, I guess, to move forward. And whereas earnings expectations are coming down in other markets, particularly the more trade and global economic sensitive markets and sectors like autos and tech hardware across Asia, we're not seeing that in India. So we are actually able to recommend to clients consumer discretionary and capital goods stocks in India, which we're not recommending in the broader region. India is also not that exposed to global trade. It's somewhat exposed to oil and somewhat exposed to some of the developments that are going on in relation to sovereign risk elsewhere in the asset class. So we have had a couple of rate hikes in India. But our overall judgment is that India is a sufficiently strong macro and micro story now to justify an overweight. And as you say, it has outperformed.
Well, very interesting points being raised by Jonathan Garner there, and you can catch the entire conversation right after market open today at 9:20 a.m. With that, let's turn to the rupee and the bond markets. Saloni Dhanuka is here with all the updates there. Saloni, good morning. What are you picking up?
Good morning, Alex. So talking about Indian rupee, it erased all its gains on Tuesday and eventually ended flat at 69.83 levels against the dollar. Now, the rupee was largely weighed by strong dollar demand by importers amid weak local equities. On the contrary, we have seen bond markets doing well on Tuesday as the yields slipped for second straight session and it stood around 7.83%. Well, on the global front, dollar index now trades marginally higher at 95.20 levels, thereby snapping a 6-day losing streak. That apart, the Federal Reserve's latest meeting minutes showed that the central bank is ready to raise interest rates. Again, if the economy stays on the track, traders do remain cautious ahead of the anticipated US-China trade talks this week. That apart, if you see euro, it trades lower after rising for 6 consecutive sessions versus the dollar. Well, speaking about pound, it trades 0.2% lower in the early Asian hours today versus the greenback. And lastly, speaking of dollar rupee, now it is trading at 69.87 levels against the dollar in the non-deliverable forward markets, which indicates a flat to negative opening for Indian rupee in today's trade, Alex.
Thanks so much for that, Saloni. Now moving on, Bengaluru-based microfinance lender CreditAccess Grameen will be listing on the bourses today. The company's IPO had received a tepid response from retail investors. Shraddha Babla is here with more details on that listing. Shraddha, good morning, first of all. How is the listing likely to be?
Right. So, Alex, I'm just going to start off by telling our viewers the issue price, which has been fixed at 422 per share for this microfinance lender. And this, the total issue size was 1131 crores, out of which 501 crores was offer for sale by CreditAccess Asia, which is the promoter, and a fresh issue of 630 crores, which would have been used for augmenting the company's capital base. Now, if we move on, we'll see that the company received a pretty tepid response. In fact, the issue just managed to sort of sail through with a total subscription of 2.2 times, largely led by institutional investors because the HNI and retail categories remained undersubscribed. So because of this tepid response, the street is expecting the stock to list with a premium of anywhere between 2 to 8 rupees per share. So it's likely to list anywhere between 422 to 430 per share. So it's the 430 per share would also imply just a 2% listing gain. So let's see what the valuation would then look like for this company. Now, at the issue price of 422, the implied market cap is 6,050 crores, and the post-issue basis price to book multiple is 2.9. If it lists below its issue price at 412, then the price to book would be 2.8 times, and if it lists above the issue price at 432 or so, the implied market cap would be 6,200 crores, and the price to book multiple would be as much as 3 times. Now, how does that compare with some of its peers? For Bharat Financial, the FY18 price to book value is 5.1, which is in a way justified on account of the higher return ratios, and it's not directly comparable to Bharat Financial because the stock largely tracks movements in IndusInd Bank now, and Satin Credit Care, which is again a pure microfinance player, trades at 1.7 times its price to book. So clearly, CreditAccess Grameen looks expensive at this point in time at the issue price. Next, what we are having is a quick recap of the company's business. 2 states, Karnataka and Maharashtra, contribute to as much as 86% of the company's AUM, which exposes it to high geographical risk. But the company has done well as far as financials are concerned. So over the last 4 years, that is over FY14 to 18, the AUM has grown at 57% and net profit at 65%. And the gross NPA, however, has moved up from just 0.01% to nearly 2% levels. If you look at the return ratios, the company had a ROE of 11.8% in FY18, and that has come off by as much as 500 basis points over the last 4 years. And that's one reason brokerages remained divided as far as their opinion on the IPO was concerned. While Antique and MK thought that the the valuation was expensive given the low ROEs, they had a avoid. SMC Global had a subscribe because they thought that the suboptimal ROEs have been priced in, whereas Prabhudas Leeladhar said that they don't see listing gains, and only if you want an exposure to a pure microfinance player should you subscribe to the issue for the long term. So muted listing around the issue price is expected.
All right, thanks so much for that, Shraddha. Moving on to a special conversation. This particular organization made headlines when it acquired a part of Tata Steel's UK business and is one of the most aggressive bidders in the IBC process right now. Liberty House's chairman, Sanjeev Gupta, says the company has set aside $5 to $10 billion for stressed asset acquisition in India. And speaking to Bloomberg Quint's Ira Dugal, Gupta says that his firm has a new target, Bhushan Power and Steel.
If we are able to complete on Bhushan, that changes the number. But in general terms, our comfort zone in other hubs has been $5 to $10 billion as our target sort of space at which we feel we have a critical mass in the country.
$5 to $10 billion, that's a lot. How much have you committed already across the 2 assets that you won?
Not so much. Remember, Amtech has other associated or subsidiary or affiliated businesses like Castex, NARGL and Metalist, which are in the fray. So that bucket so far is just over $1 billion. And of course, Adhunik was not a big amount.
How important is Bhushan Power and Steel to you? Are you still, what is your understanding? Are you still in the running? Because media reports suggest that there have been other bidders who have bid higher.
So time will tell. This process has taken many twists and turns. Obviously we are still in the process. We are keen for sure. Obviously we've demonstrated that already. But time will tell. With or without that, we are committed to our India strategy.
And you can catch that entire conversation on Bloomberg Quint Live today at 10:30 a.m. All right, Shraddha is back now. She had to run across the newsroom, but she's back with the stocks in news. Shraddha, what are the stocks on your list today?
A lot of them, Alex, because we come back from a holiday. So I'm going to start with earnings. Procter & Gamble is one where the numbers were weak. Revenue growth of 4%, but EBITDA was down 36%. This was mainly on account of higher employee costs, higher advertisement expenses and other expenses, which has taken the EBITDA margins down by 10 percentage points to just 16%, and that has pulled down the net profit by about 43%. So expect a negative reaction there. Motilal Oswal total income grew by 8%, but the net profit came lower by about 18% or so. So weak set of numbers there, but good set of numbers coming in from HDFC AMC, which has listed recently. Revenue growth of 20%, net profit growth of 24%, and mutual fund AUM grew by 22%. That apart, you also have Pratap Snacks, which has acquired 80% stake in Gujarat-based Awadh Snacks Private Limited for 148 crores. You have Times of India report which says that Shell's arm will offload 14% stake in Mahanagar Gas via block deals today. So watch out for that name. As also Lakshmi Vilas Bank, which according to a ET report is in talks with investors to sell up to 51% stake. You'll also have Max India, which will be in focus, and this is on the back of a Business Standard report which says that KKR has emerged as a main suitor to buy 47% stake in Max Healthcare. So Max India is the holding company, and hence that's the one to watch out for. ITI Limited may react positively to an order win of 2,658 crores. That's a order win to a consortium. So we don't know what the share of ITI is, but a positive reaction is likely. And finally, HDFC has bought 25% stake in Good Host Spaces for about 69 crores. And that is a company which is engaged in the business of managing and operating student housing facilities. So that's another stock that we'll have to watch how it reacts. But these are some of the names to track.
All right, thanks so much for that, Shraddha. Now, there's clearly a lot to talk about today, and a lot of stuff that's going to emerge over the course of the day, not least of which being the news on the Aramco IPO. So do stay tuned to Bloomberg Quint Live, and we'll bring you all the latest updates. Up next is All You Need to Know.